Well, hello, welcome to today's show. It'll be a pretty quick one. Just want to hit one thing, really a holdover from last week. As we know, the Fed didn't change rates one way or another. The only thing that we're seeing a little bit differently on this is there's some rumors going by that maybe we might have a rate hike. Now, I think that's way too soon. My gut feel is with Trump's new guy, that's probably not going to be the thing he wants to do, but it is what it is. We'll find out. Depends on inflation, and I think inflation is holding at its current rate. It's not getting any worse. It may not be getting any better, but 0.4%, something like that. Depends on which one you want to look at, CPI or the leading indicator that the Fed uses, which is the CPE. So it just depends on what you look at, whether or not you think is good or bad. But we'll go ahead and kick it over to the story. Edward Jones, and I came across this thinking about we've got a new company now announcing that because of the changing political climate and eat the rich, that they are leaving New York City. And I'm not going to cover that particular story, but anyway, it's Morgan Stanley. Morgan Stanley was on the radio today, is planning a massive $1.3 billion office tower in Dallas after securing an $18.5 million local incentive package. Okay, well, I'm not real good. This is $1.3 billion, that's $18.5 million. 18.5 is nothing to sneeze at. We heard about Goldman Sachs, I think a week or two ago, JP Morgan Chase. Currently employs more people in Texas than it does New York. We're looking at North Texas firm building a 1,800,000 square foot campus in Dallas. Wow. So what we're looking at, lots of financial companies moving out of New York because of policies. They don't like them. They're moving out. So that's going to have an effect. Now it looks like maybe Tennessee is not picking up these companies the way that Texas is. It looks like maybe Texas may be the new Manhattan before it's all over. We don't know. I think Alpharetta, Georgia, place not too far from where I used to live when I was down in Georgia. Alpharetta was putting in a bid for the Morgan Stanley, but apparently they did settle on Texas, and it may be because there are other like-minded companies in Texas. It always makes it possible if one company lays off some people, the people don't get hurt that bad if they go to another similar type company in the area and vice versa. So yeah, it's kind of like automobile clusters in certain parts of the Southeast. Maybe that's why they're going to Texas. Wish we could have got some of that, but we didn't. But anyway, going back to this Edward Jones, that I found this article. It's a week old, but it is from Brian Theron, published June 18, 2026, weekly market wrap. And he says Fed tilts more toward the hawkish in Kevin Warsh's first meeting as chair. I just heard that we didn't make any changes. We didn't do anything. So held steady the funds rate. No big deal. Updated economic projections pointed to more inflation-focused Fed. Inflation forecast moved higher. Labor market assessment improved. The near-term growth was lower. So they're saying, well, we didn't get as much growth. Yeah, maybe we ought to think about it. So at least break you into the idea. Officials remain divided on the next policy move. Nothing new there. The markets interpreted the policy message as more hawkish than expected, pushing bond yields higher, particularly at the front end of the yield curve, which tends to be more sensitive to changes in monetary policy expectations. So for investors, the key takeaway in our view is that while the interest rates may stay higher for longer, Fed is not yet signaling the start of renewed tightening cycle, which is kind of what I thought it would be. I'd be surprised if with Trump's new guys, if they raise them. If they do, I don't see it being not right after he just took the reins. I don't see that's going to be, but maybe. In this backdrop, we believe equity markets can continue to perform well, particularly if earnings growth remains in the double digits range. Well, let's look at something real quick. All right, we are at TradingView and we're at markets everywhere on this first one. We're looking at the Dow is down just a little bit, just barely, just about even. We look at NASDAQ down about 1/10 of a point. Well, no, that's about 7/10 of a point, about 1%. S&P is up. Small caps are down 0.36, 0.5. So we're just right there together. Let's look at U.S. stocks. We did hear this earlier today that they were moving lower. This is, of course, is at 1450, which is what's going to be about 3 o'clock. So it's still in there. We're still hanging in there. We're hanging in there. Who's in the red? I don't know this company. America Car Mart, don't know that one. Car Mart. Flash Sports, don't know that one. Macy, Cayman Holdings Limited, On Semiconductor Corporation. All these are down. So who's up? Don't know these guys either. They're the biggest winners and the biggest losers today. And we're looking what? 238%. Wow, that's a big jump. But it's only a $20 stock, so that's not really saying much. All right, IPO. Hey, did you get yourself into any of that SpaceX IPO? I didn't, because I think a lot of times looking at a lot of companies like Rivian's for one, their IPO was a stock high. It's tanked ever since then, if I'm not terribly mistaken. So yeah, we got stocks. Yeah, they're moving up over the day. Let's take it for a year, see where we're doing over the last year. We've come down on this one. WorldSoft, Microsoft. Let's see about Saudi. They're up. Of course, oil prices were up. TSMC, they're down today, but they're up over the year. Let's go back up to our, let's see, where are we at? S&P. And we take it to a year. Let's take it to a year. We have jumped significantly since April. So I don't know. You can draw your conclusions, but I don't know that the equities market has been upset by the rumoring that the weekly stock market update from here at Edward Jones, their opinion didn't seem like it upset anybody. New guy at the helm. My guess is, if anything, he's not going to do much of anything right off the bat, because he's a new guy. Maybe down the road, we have to see, and he'll do like the last Fed chair did. He'll look at the data. But anyway, that's it. In our area locally, we have CallDelToSell. That's this handsome devil there. We're going to look at Rutherford County, look at the county entirely. Let's let them draw the charts. Not really seeing anything terribly crashing here. Our average sale close is a little flatter than maybe we had it back in 21 through 22, but it's still holding its own. Price per square foot is holding its own. Pricing ratios did flip after 22, but that's not new for us, right? New listings are still going along their cyclic price. They're just along the wave, like there's nothing new happening. But look at the total showings are still tending to go up. Months of supply has taken a little bit of a dip. I think that's probably because of some of the activities that we've had, fears of which. Active inventory still going high, hasn't really broken, if you can see that right there. Active inventory hasn't really broken too terribly bad. If we go to the red one is March of 26. It's coming back up. Here we go to April of 26. April is typically our biggest jolt in the arms around the third week in April. So April was about the same, maybe a little bit down in here in, we get back on there in, get the red one. May, we down a little bit in May, June, July. We're entering in July, and we look like not really much in Rutherford County. Everything, nothing, you don't see anything just dropping off the face of the earth. We can check, let's check Cannon County. We got Cannon County, there we are. Cannon County entire. It's a smaller market. We may see a little different trends, a little bit more noise. There's a lot less activity there. But even with them, we still have total showings arcing on the rise. arcing on the rise. So yeah, I don't really see that our local markets in Middle Tennessee being upset that much. So be prepared if you think that maybe 2-3 months down the road we're going to see an increase. That might be there, but it's going to start coming in to the fall, and things normally slow in the fall anyway. That, if you're a buyer, might be a good time for you. We're already starting to see some of the time frames stretch out a little bit, so it may not be bad. It may not be a bad time. And remember, there's nothing ever happens overnight in a vacuum as a surprise, so we'll be in good shape because you watch the show.